Welcome, everybody, to Wall Street Reporter's next Super Stock live stream, February 16th, 2021. We are back with VSBLTY Groupe, VSBY, CSE, VSBGF over the counter. Stock has been moving up. Let's find out if this is going to be, our second 10 bagger of 2021. Jay, is this going to be the second 10? We're getting close. We're getting close. Started at 17 cents, 80 cents right now. You got to get to $1.70. So halfway there.
We've only just begun.
I like that. I like that. This is what we got to find out. So a lot of, I've noticed a lot of the pace of news partnerships has really been accelerating since December. Like end of November, December. Today, I want to kind of get into an update, all the new partnerships, the new deals. I want to unpack that because we do have, again, a lot of people right now, new people on the live stream. Just give them a quick snapshot. What does VSB do, the markets you're in?
Sure. VSBLTY is a computer vision company. We apply computer vision, which, if you understand what that technology is, we teach computers coupled with cameras to understand and contextualize and report on the things that they see. We do this in retail, and we do this in security. In retail, we're measuring movement of persons within retail for operational efficiency, what they call in our world the shopper journey. We also measure movement of persons within retail, particularly with respect to their engagement with brand. That's a big wallet in retail. When brands can measure people's engagement with them by way of digital display and computer vision, we can find a way to monetize the brand engagement at retail. And that's an explosive market. Had been incubating for 3 or 4 years, testing some theories and some engagement modalities and of course some business models. And we're now past that testing phase and we're in deployment. Our biggest deal in the company's history, which I'm sure we'll talk about, is monetizing the store as an advertising medium. The second half of the technology that we address is computer vision for the applications within security. You can imagine if you're in the security environment, the Achilles heel of security, when I put up CCTV cameras, is the number of people that view those camera feeds. We're human beings, we're finite in nature. And there's example after example after example of incidents occurring within CCTV monitored areas that operators didn't see. So the hypothesis of artificial intelligence and computer vision in the security world is we take multiple video streams and we analyze for anomalies. Anomalies might be as simple as finding a person that is banned from a facility, a trespasser. It could be a weapon. It could be a fire. It could be a car accident. It could be multiple smart city utilities. The garbage cans are full. All the cars are on the alternative side. If you're an ex-New Yorker like you, Jack, you know that you've got to behave yourself with respect to your parking restrictions. These are all computer vision challenges that we're now adopting because the cost of doing so has come down to a point where there's an economic value to it.
So, and I think also in the anybody, if they want to see like the demos, all that stuff, we have like multiple videos that you can check on our channel with VSB. We actually, you got to see the whole video, which really explains the potential uses for market. Really, you're addressing, multi-billion-dollar markets. Between the security side, which is one aspect, and also the retail, the kind of store as media, which is really also taking off in Latin America. You combine the two of them. The store as media and the security aspect.
Yes.
So, some incredible things happening here. Let's get into the recent news. This is what I want to kind of like unpack the last couple of deals, what they mean for the company. So let's start off with today. What is this? Okay. What does this deal mean?
Today we signed a contract with EOS Lynx. EOS Lynx is owned by Renewable Energy Alternatives. You can imagine that if you're in the solar farm business in the US, you have to be an expert at subsidies. how to tap into the federal subsidies and make that economic model work for when you're deploying solar farms, any alternative energy, frankly. And so that company, REA, Renewable Energy Alternatives, spawned another company called EOS Lynx. They're in different segments of the similar marketplace. EOS Lynx value proposition is electric vehicle charging is exploding. In fact, you'll hear people comment that the problem with adoption of electric vehicles has everything to do with the reach of the distribution of EV charging. Wouldn't it be, I don't own a Tesla, but if I did, if every time I went to charge my Tesla, I had to wait for 30 minutes, this would be a significant difficulty for me in terms of adoption. So that's a problem in the US principally right now because the distribution network is still maturing. The hypothesis of EOS Lynx is deploying solar-based EV charging stations across a broad grid, many, many thousands of locations, and delivering security and digital display on top of that platform. If I'm going to wait for 15 minutes while I charge my Tesla, not only am I a desirable audience, a high disposable income, etc., but I'm captive. I'm going to be receiving messages from a digital display, which are monetizable from an advertising perspective. I'm solar connected, and I've got a security apparatus in place. So that's the hypothesis of EOS Lynx. The hypothesis on the other side, renewable energy alternatives, is these solar farms are in the middle of nowhere. What a great application for computer vision, proactive security, so that something occurs where nothing should be occurring. We can identify, alert, and preempt. And that's the idea. So on both of those marketplaces, we're providing computer vision solutions. On the EOS Lynx solar mobile solar trailer side, that's both digital display and security, and on the solar farm side, it's security. So we're delighted by that, by the opportunity to do business with these guys.
Okay, and so Jack Topolowski is asking, so they have 1,500 locations that you can scale to?
Well, they've told us, and it was in the press release, that they will be at 1,500 locations by the end of 22 and 5,000 by the end of year 3. So the unit level economics are important to understand. So what I'm going to do is I'm going to break it down in 1,000 unit blocks, if you can think of it that way. 1,000 locations, and we announced in the press release the first deployment on the solar farms with Puerto Rico, where there's 20 cameras. So if you can assume that each location is 20 cameras and 1,000 locations, we're not always the same, but depending upon the metrics we run, we're between $25 and $50 per location per camera. So per camera per location. Sorry, per camera per month. So that's 300,000. If it's 1,000 locations, 20 cameras, that's 30,000. So 20,000 cameras at $25 a month. This is a significant addressable market. Just for EOS alone, that's $600,000 annual rate of return, just based upon their first year projections.
No, so I got wait, so it's about 500 grand a month roughly revenues.
Yeah. Well, at full scale, yes. Yeah.
Okay. So the deal's worth $6 million a year, and I think we should add these deals keep adding up. This is like just the Modelo. There's multiple deals that you're doing which are each 5 million, 10 million potential. They're stacking up. I think one key thing is this is so it's recurring revenues. You're in the SaaS business. You're not in the hardware business, right?
We're not. Okay. We're not in the hardware business. Yeah. SaaS,
software business, recurring revenues, high margin. What's now? You got a couple of other deals. You got this. Was it 9/11 Inform? You got
that's that 9/11 Inform is I call it a sleeper. It's a really interesting deal, and it's important, I think, to talk about how we identified them. The schools marketplace has always been attractive to us. It's a marketplace that's got a well understood funding mechanism. There's federal cash available to deploy security infrastructure in schools. And the big players, there's 4 or 5 big players. We targeted 911 Inform. We understood their value proposition, and we beat competitors to win that business. And if you think about what they do, it's really interesting. There are two laws around 911 location. If you might not know this, but your mobile phone pings and tells people where it is all the time, and that information, in the event that a 911 call is made, is provided to the 911 center. Well, there's two laws, Kerry's Law and Raybaum's Law, both of which came into effect this year, which require infrastructure investment to make that location data more granular. So if you're in a school, one of the problems with 911 is you can't tell the difference between the third floor and the first floor, because it's an X and Y axis. It's not a depth axis. So what 911 Inform does is it provides building mapping systems, and the 911 data, location data, is provided to those building mapping systems. So if Jack calls from the gymnasium, we can tell you're in the gymnasium as opposed to 3 floors above the gymnasium. And we overlay video cameras. So a first responder arrives on scene, think of a SWAT team. He opens up a mobile app, he downloads the building coordinates, and in real time, he can pull the 911 data and the video data of actually what's happening in the school. What's inspiring to me about that deal is it will clearly save lives. It will identify what they call in the first responder community, provide situational awareness, what's happening per room with a video overlay on top of 911 location data. So it's really interesting to us. We're excited to start our first pilots in New Jersey in the next 30 days.
No, so this really, I noticed the pace of deals is starting to build. We got one of the big ones I think is the Modelo deal. A lot of people are interested in that. If you can kind of recap what that's about, people want to know, and give us an update.
Sure. Well, first the update, and then I'll break down what we're actually delivering. It's a complex deal. There's lots of moving parts. There's a gaggle of lawyers involved. It's the most complex deal that we've done as an organization. In my career, it's probably top 5 most complex deals, but it's moving forward. We're incredibly inspired by the commitment these guys have to the project. Their faith in us is outstanding. There's no wavering. We're moving forward. We expect it to be done shortly, but it's a complex deal. So in terms of what we're delivering, Modelorama is a conglomeration of retail locations in Mexico. AB InBev, the parent of Modelorama, has both direct and indirect influence over between 100 and 120,000 bodega level stores in Central and South America. The objective of this network is to build the world's most comprehensive digital network across all those platforms, delivering 3 things. 1, digital display, monetizing Pepsi at a small store, or monetizing, more accurately, Budweiser, delivering Budweiser impressions, advertising at the store. We measure that with our computer vision for advertising efficacy. We measure number of men, number of women, engagement, sentiment, age, all of that delivered as a comprehensive data set for the advertiser as a way to support the advertising. The third piece is the security piece. If you run a small 20 square meter convenience level store in Mexico, you're facing threats to your security all the time, every moment of the day. So we deploy digital display, data collection and measurement for advertising support, and security for the purposes of security. All that delivered under a single umbrella. The objective is that we've talked about publicly is 50,000 stores, but the overall addressable market is north of 100,000 stores.
And how much is it worth, dollar-wise, per store, per month?
Well, we're still finalizing the economic model, but from VSBLTY's point of view, there's 2 revenue streams that are beginning to articulate themselves. Well, have articulated themselves. The first is the revenue stream associated with the licensing, which we get between $10 and $20 a month because of the massive volume of this deal. We broke our regular metrics, and we negotiated a deal with them between $10 and $20 per month. The second revenue stream, so that revenue, the first revenue stream in 4 years is in the neighborhood of $30 to $40 million.
How much again?
$30 to $40 million in the first 4 years.
Okay.
Just based upon projections, Jack. Just based upon the pace of growth.
Okay.
The second revenue line is from the media. Because we're playing this comprehensive role, we're not restricting our deliveries to just the software piece, because we're pretty comprehensive media company as well. We have brand relationships we're bringing to the table. So we're part of a combined structure, which has not yet been defined, but think of joint venture or combined company, where we own 33% of the revenue that comes from the media sales. Well, that's $400 or $500 million over the same 5-year time span. So we're still finalizing all those details. All that data will be disclosed when we're final. But for us, it's an enormous opportunity. Not only is the largest digital network being built today in the world, it's significantly bigger than the second player, if you know what I mean. It's got 2 discrete revenue lines, and it's with one of the most iconic brands in the world. So we really couldn't be happier with that deal.
Yeah. So basically, if anybody is like kind of tracking these numbers, right now with you're kind of the new the new deals right now, you're going to be up to roughly, by the time you exit 21, could you be at a run rate? I mean, what would be the run rate? It could be north of 20 million a year at this point.
15 to 20 million is what we're targeting right now.
Okay, and that's
I would be happy to report greater than that, but we're going to hold the line at 15 to 20 for right now, because the issue when projecting that is you're projecting pace of deployment.
Yeah.
And right now we're active and we're deployed in 4 countries in the middle of freaking COVID. So we're just going to be conservative on our estimates. We have to make sure we meet those, because if we don't meet them, we're going to have a lot of questions to answer, and we don't want that. We want to deliver. So our current objective and target is 15 to 20 million in bookings by the end of 21, and we think we'll make that with some despair.
Okay, so basically, I mean, the key thing is we really don't know how the pace of it is going to work, because there's factors that are out of your control, COVID or different things in the market.
But from an ABI perspective, Jack, it's important that we can't go fast enough. So the objective for the first quarter is 2,000 locations. The objective for the first year is 5,000 locations. So there's nobody that's tapping the brakes or getting anywhere close to the brakes, despite other macroeconomic issues that might be impacting retail. It's not impacting this part of retail.
You're going to have 2,000. You're going to be in 2,000 locations in this quarter, first quarter here.
By the end of this quarter, yes, it'll be our run rate. Yeah.
Okay, that's going to be a significant number. Okay, so things are really picking up. I mean,
the entire organization is focused on execution at the moment. This separates the men from the boys. Because it's one thing to go land a deal and talk about the transcendent and crystallizing expectations of that deal. It's quite another to get it deployed with the revenue in the rearview mirror. And that's our principal focus in Q1, execution.
So we got a comment / question. So potentially 50 million based on these 2 deals, the Modelo Roma and this. So is that about right?
I think that's about right. Yeah, I'll have to go back and look at the numbers, but that seems right. Yeah. Okay.
So how big is the total opportunity? I mean, so I think what's the takeaway here is just in the last couple of months, you've signed a couple of very substantial deals. But are you just scratching the surface, or is this the whole? I mean, like, how big is the total market opportunity that you're going after? I mean, like with between the retail, between the U.S., like. I mean, what is the upside potential here?
Well, we haven't talked too much about this, Jack, at least not in this conversation. But on the security side, the current security services market in the U.S. is about $100 billion. I'm just restricting my comments to the U.S. just for easy math. $100 billion is the U.S. size. It's going, based upon estimates by Forrester and others, to between 190 and 200 billion by 2023. That's only 2 years away. That growth is AI investment. And let me break that down for you. No one's going to install dumb cameras anymore. I'm not saying nobody, but the bulk of the growth will be in artificial intelligence infrastructure, because the artificial intelligence is the very next thing for security. Obviously, we moved from a place where security is all about retrospective or investigative or forensic. What happened when something went down, to a place where what's happening as it's going down. Now we're moving away from forensic to prevention. Prevention necessarily means monitoring. We know we can't do that with people. The math doesn't work. So we're doing it with AI. And so the growth, that 100 to 187 to 190 billion growth, will be principally in AI. So all of that sits in front of us in just the next 24 months. That's just the US. Obviously, that's replicated country over country, region over region, which actually, Jack, if you don't mind, leads me into perhaps the most significant press release we've done in the last 2 weeks, which was a press release we did with Ability Corp out of Taiwan and Intel. And this is a result of 9 months of development work, starting with the hypothesis of, guys, today when you deploy an artificial intelligence smart camera, it needs a computer, it needs a camera. The computer pulls the video stream from the camera and creates inference logic, decisioning, what's going on. That's where the algorithms run on the computer. That's an expensive proposition. Cameras are sitting in the $600 to $800 range for decent resolution, and computers are in the $500 to $700 range. The hypothesis of Intel was, we want you to run your inference logic visibility on the camera itself, a little chip on the camera that runs the inference logic. That's a $300 camera, inclusive of chip. So if we're able to do that, we would break the economic model. We'd open up a mammoth marketplace, and that's precisely what we did. So when you see us doing these announcements, 911 Inform, EOS Lynx, more coming in Latin America, it's because we've broken the back of the economic model, and places that were previously unaddressable are now not only addressable, Jack, but scalable. And that's, I think, what's critical to us. That's why I refer to that deal as kind of a not fully appreciated yet. The appreciation of that deal will come as we start to land deals connected to that innovation.
Okay. Question from Farron on one of your newest deals, which is the WestRock. Again, if you can just give a quick recap.
Sure.
And what's the update?
So who is WestRock? WestRock is the largest packaging company on the planet. We've all seen their stuff. They're an S&P component company, large organization. I think this goes back to Jack, that something we talked about before. We align with force multipliers. We don't necessarily align with companies that are small or good players in the category. We either align with enormous disruptors like 911 Inform, huge disruptor. They won the Frost and Sullivan Safety Innovation Award for 2020. That's a disruptor. WestRock is a market mover. WestRock's historical business is display advertising. They build physical displays for retail. It's a huge business, the largest player in the world. That business is pivoting to digital en masse. So the reason why they did the deal is they recognized that their business was moving that way. We're a major player. We have enormous integration. I have one member on my executive management team that basically performs a role on their executive management team. So we're tied at the hip, and we go almost everywhere together. We've got multiple deployments already in retail, and we'll have 3 more announced probably this quarter, and more coming with major brands. So we're really beginning to do that with them.
And this is the technology where your AI, basically you have in the store, you have a digital sign near like a key product area, and based on who's passing by, it can give them a customized message.
It can give them a customized message, and if that's too creepy, because for some retailers they don't want to do that, we're measuring footfall, we're measuring men, women, all that data collected supports the spend. That's why advertisers spend the money, so they can get analysis and depth of analysis on traffic. It's basically what created Google, Jack. We know what created Google, and that's the ability to understand and measure impressions on the internet. We're measuring and understanding impressions delivered in bricks and mortar. That's what visibility does on the retail side.
Yeah, I mean, it's a massive opportunity. Okay, so
Oh yeah.
and also I should mention. So you mentioned the force multiplier thing. So again, your partnerships are like with WestRock, which is massive in the store space. You also with Sensormatic, which is in store. So you have I guess your foot in the door with potentially, I mean, covering just about everybody in the retail space between those two players.
We bring to them agility, innovation, and speed, and they bring to us distribution and reach. It's a good marriage. We can't possibly get to the places that they're already. Sensormatic is an example. 185,000 discrete customers in 104 countries. I couldn't build a sales force fast enough to reach that many customers. They're there already, and they view us to be a very strategic part of their business, and look for that relationship to get tighter as we move into the next quarter.
One thing we should just touch on, because this is, I think, which is important, is you're getting a lot of data. You're collecting all this data between the security side, between the retail side. We talk about monetizing the data. I mean, because this ultimately that could be the real. That's like the big upside there. What? So Ray J's asking, how will you monetize all this data?
Well, in the U.S., I should point out really quickly that one of the things that ABI saw in us is precisely that, which actually speaks to their level of understanding of the direction the marketplace is going. Can you imagine having at scale, understanding customer movements and transaction level data on 50,000 stores, just to pick a number in the middle of the range, per moment, per day, by sex, by hour, by sentiment, all of that tracked against transaction data. Incredible data, unlike anything in the world. So part of that relationship is when we go into this combined group together, we're co-monetizing that data. ABI has 630 unique brands. Each of those brands live and die on the data. So to us, it's a great way to test that hypothesis. So who monetizes that data? We monetize that data together with ABI in this construct. And as we move that idea to the US, as we deploy into retail, we own the data exclusively with nobody else. And so far, although it comes up every time we have a contract negotiation, we successfully have made the case every time so far that we own the data. We don't co-own the data, is exclusively ours. Now that data has a certain value when it's a small data set, which is what it is now, and becomes incredibly valuable when it's a larger data set, which is where it's going.
Question: which will be bigger, retail or security?
I get that question a lot, and it's what is Modelorama? Is that a retail deal or a security deal? Because it has both. I think it's too early to say. I can tell you that with some of the partnerships that we've not yet announced in the security space, there's a couple of players with enormous horsepower, and if they dig in the way I expect and hope they dig in, the answer is easy security. But we'll see, and we're continuing to invest in both sides. Thankfully, it's the same plumbing, Jack. Right? It's the same engine. So we really don't have to make a bet that would constrain or direct R&D, if you know what I mean. That's important.
You have a lot of leverage based on your existing technology. So this is, I mean, this is like good margins, a lot of leverage. Val is asking, are you getting traction in Asia or Europe?
No and yes. Asia we haven't invested in at the moment, and we're just looking for the right opportunity. Having said that, we have two channels, UST Global, one of them, who are heavily invested in Asia, that are dragging us into two opportunities in Asia, one in Singapore and one in Hong Kong at the moment. So we'll see if those manifest. But again, this is back to the hypothesis. Our go-to-market model isn't us investing directly in Asia. It's us investing in our partners who invest in Asia, as an example. And that's how we open up those marketplaces. In Europe, in fact, this morning we were on a call about a deployment in Italy that will probably happen in the second quarter with very large grocery retail. So we're starting to get European traction right now.
Okay. More deal. Are you expecting more deals this quarter?
I'm always expecting deals. We're trying to keep up the cadence of the deals. We want to make sure that we're communicating to the marketplace exactly what we're doing in as granular a fashion as we can. But yes, we expect more deals, both on the retail side and the security side.
What point do you expect to achieve profitability?
Our current models, based upon a $15 to $20 million fiscal 2021, will show us profitable round about the turn from the third quarter to the fourth quarter, in that neighborhood. This year.
So this year, okay. The next 9 months.
Right.
Okay. Let's see. What other questions do we have here? Hang on, Jay. Stand by. We get a lot of questions. I guess here's a fair question. I mean, what can go wrong with any of these deals that could derail, these growth? I mean, I think the numbers you have are conservative, right? That 15 million plus this year.
I believe so. Yes. Yeah.
What could go wrong? I mean, give us a laundry list.
Well, listen, we've successfully navigated COVID as an organization, and it seems to me like dealing with that it kind of makes you bulletproof to anything else. But I suppose if someone were to pressure me, what could go wrong? Poor execution. But as an operator, I'm an operator, and I focus on execution. So we've added a little bit to our staff just because the risk of suboptimal execution is just too high. So our focus right now is not on necessarily bringing new fish into the boat, although we're really never stopped doing that. It's making sure that those we've landed, we execute properly. And that's a very strong focus of the company. We spend a good deal of our time strategizing and dealing with those issues, execution issues.
Okay, we got a question about was just recently announced, the Canadian Tire stores. Zubair is asking, are you expecting to get into more of their stores? How many do they have? How many are you in?
We're not disclosing the number, but I can tell you that it is no longer one, which is where we started. It is now growing. And we agreed that we wouldn't talk publicly about it until it was ready, but we're growing that footprint right now, both with respect to capacity management, is this computer vision driven occupancy, and loss prevention, facial recognition. So we're really excited about that. And there'll be further announcements on that.
Can we expect a partnership with Telus ADT?
There's a component of our strategy which has not yet been disclosed. I mentioned earlier a major horsepower player that's going to assist us in that marketplace that is focused on carriers like Telus, carriers being AT&T, Verizon, etc. And so yes, they're part of our strategy, probably mid Q2.
A bunch of people asking the privacy question, because this always comes up. You want to address that? I mean, you could, I guess, turn up or turn down the privacy for different markets.
There's always privacy concerns, and generally speaking, this can be a 4-hour conversation, but I'll make it really short because it always comes up every time. We don't collect personal data. We just collect anonymized data. So we don't collect Jack Marks as Jack Marks. We collect a man of a certain age with a certain sentiment, movement within store geospatially in a certain fashion. So nothing we collect, store, or manage can be deconstructed or reverse engineered into identity. Because of that, that gives us a pretty clear path into areas that don't bump up against the most aggressive privacy legislation like GDPR, which is in Europe, CCPA, which is in California. All with 2 exceptions. In both Illinois and in Texas in the US, the mere fact that you can collect demographic data, age, gender, sentiment, that's illegal without consent. So we don't do it there. We just avoid deployments there. In every other state, a more practical approach to privacy has been taken. where we are completely out of the crosshairs of the privacy concerns because we don't collect any personally identifiable information.
Okay, we got a couple of accounting type questions here. What are expected? What are expected R&D expenses moving forward?
We run on the neighborhood of $1.5 to $2 million of R&D. That's our projection for 21, and it was not a whole lot different than that in 20. So I don't imagine it's going to change a whole lot. I can tell you though that there are some conversations going on with key partners that wish to underwrite our R&D because we're faster, better, more equipped, and that's a scenario we would certainly entertain.
Kobe's asking, when will you see improvements in the operational margins? All this revenue growth is great, but it works against when we have negative margins. So what's
the good news about us is that we're software as a service, and we run at margins that are north of 85, 90%. There are some instances, I'll grant, that we get tricked into or forced into supplying hardware, which blends our margins down to 50, 55. But in terms of an EBITDA, we'll be going forward as we normalize our operations, as we look to go profitable and the end of this year, we'll be on a normalized basis, we'll be in the 40 to 45% EBITDA range.
Sam is asking, since you have Canadian Tire, can we see Walmart, Costco? What are the? I guess he's asking, what other big brands can we see in the U.S.?
We have multiple conversations going on in multiple retail categories. The greatest attraction is in the grocery category. But there's multiple engagements in what we call the DIY category right now. And, Canadian Tire doesn't easily fit into that category, but it'd probably be the closest to that. The US equivalent to that might be a Lowe's or a Home Depot. So we're seeing traction in that category. As you might know, Jack, retail hasn't been universally strong in 2020. Mass, if you're in Nordstrom's or Macy's, life's miserable. You're down year over year. But if you're in grocery, DIY, even drug, you're up year over year. So that just correlates to where the investments are occurring, not surprisingly.
Question, can we expect deals in India, security deals in India?
So one of the partners that we have for Mexico is an India-based integrator, one of the largest in the world. And their desires are to take us into India. Early days, commercially not solid yet, but that is absolutely a desired location because of the demand. There's significant demand of security solutions in that marketplace.
Question is, do you have enough staff to execute this year? And
we actually just went through a mini boom. Sorry, Jack, I spoke over you. Say that again.
I guess he's asking, do you have enough staff, and are you hiring? Which departments? I guess he's a recruiter, maybe he's trying.
Well, I was just saying we went through kind of a mini boom, hiring maybe 6 people in the last 60 days. All of them focused on execution, as I mentioned earlier. So project management, process management, installers, remote support, that sort of thing is where we've been spending a little bit of additional money. Again, my focus is not necessarily on dealing with the demand. The demand is there. No problem with the demand. It's making sure that we satisfy the demand and execute perfectly. And that's where the focus is.
Okay. There was a question. I can't seem to, there was I guess a question or a comment. I can't see, we got a bunch of, I missed, but I guess it was a comment about the FANG stocks. Would VSBY be of interest to like a Google, or Facebook, or any of these players who, I guess, they're in the marketing technology space? I mean, you're kind of touching on a lot of the areas that they want to get into because you're touching the bricks and mortars. So this is like the last, you're the last kind of frontier for this. Is the last
of the FANG,
Amazon, excuse me.
Of the FANG stocks, there's only 2 that really understand this inflection, in my opinion. The others probably peripherally understand it, but 2 have got strategic initiatives in this category. One is Google. Google has Sidewalk, and Sidewalk is the out-of-home division. So Sidewalk understands what it is to generate advertising impressions and advertising value in non-traditional spaces. Think of out of home. Out of home could be a bus shelter, could be a billboard, it could be a store shelf. So Google understands that category. And yes, it's plausible that Google will at one point wake up to the possibility that there's a couple of companies here that are making some inroads. No doubt about it. It's not happening now, but it could happen. The other one in that space that is conscious of this category is Amazon. We all know about Amazon Go, or maybe we don't all know about Amazon Go. Amazon Go is the whole reimagining the store so that it's not attended. It uses computer vision and frictionless checkout in your mobile phone to gather up product into your basket and then leave, because the basket is artificial intelligence enabled and we know what's in the basket. You're already a known person. You've got some sort of payment relationship with the supplier, and that's how it works. So the whole frictionless store is an Amazon innovation. We're involved in that as an OEM, a software provider underneath other solutions. So yeah, it's possible that Amazon would view that to be a collaborative opportunity there as well.
You know what's interesting? So essentially, you know, the so-called, I guess you call it the frictionless store. Really, it's basically the store without, you know, people, right? I mean, this is the coming reality. I think it's actually in China. They have it. They've gotten some I mean, it's not Amazon. It's like there's a decent number of places where you do that. I guess they have it because you pick up the basket and then I think it goes through your phone. The phone's the WeChat, whatever.
The basket is product aware. It's got weight sensors, and so it correlates the basket contents with computer vision and creates a checkout based upon that information.
And you know, China's ahead of us by, you know, like a couple of years now at this point. So essentially, is VSBY really going to be a pure play on this, you know, frictionless store, or like, you know, totally self-service store? Because it has to be a reality. You know, minimum wages going up. I mean, you know, every store you go into, more and more, you know, it's a self-checkout. They don't have any cash. I mean,
yeah, Jack, we're a component play. So it's pure in that it's not sullied by other components that lower the margins. So it's still a pure play, but we're a component play. And the really rough analogy I give is we build a catalytic converter that goes inside other product solutions. So this is not yet out in the marketplace, but soon we'll be announcing relationships where we're embedded in frictionless checkout deployments. Our technology is embedded. And that's really exciting to us, because it would be tragic if that marketplace exploded the way I'm certain it will, and we had no play there. So we have this opportunity to build our product into other, that's VSBLTY as an OEM, as basically a component supplier in other people's solutions, which has always been part of our mission and direction, but now we're beginning to make it tangible.
Okay, so this is going to be, I think we're going to see an explosion, this frictionless store thing in the next, you know, I mean, it's going to be huge, you know, but in the next, you know, months, year, you know, it's taken. So basically, you're like the old ad was it Intel inside, you know, for computers. So now it's going to be VSBY inside for, you know, for retail. I mean, everybody's going to have to do this at some point.
Yep, I can live with that analogy.
So yeah, so basically, you know, it's interesting. More and more, you're becoming an attractive acquisition for anybody. It could be an Amazon, a Google, a Sensormatic. I mean, the list is growing, essentially, for the store of the future, essentially.
I think we're currently characterized as really promising disruptive technology with a team that seems to be able to put some rubber on the road. The deal with Grupo Modelo, ABI in Latin America, really changed the language of the partnership discourse, because it's the largest digital network in the world. It has multiple moving parts. It has multiple SaaS streams, you know, from 3 modules that we deploy, and it's legit. We're a legitimate player in this deployment because we've been validated by one of the world's most iconic brands, a sophisticated, forward-looking, you know, guys with vision, and that puts us in some levels of conversations, which really reinforces the disruptive nature of our company. We haven't yet, I think, delivered on the revenue projections that we can do, because we're right there as the marketplace is growing. We're growing at that pace, or maybe slightly ahead of that pace. So I think we're getting that kind of credibility, and it's really going to have an impact for the organization and open up strategic doors for us that were previously not open to us.
So Jay, let's wrap up. So why are you wearing a tie today? It was a big meeting. What's going on?
I have a couple of big ones. Yeah.
Because it's interesting. Nobody wears ties anymore. I think I'm the only guy, but we do. The CEOs that we've had on the program who've worn ties, their stocks have gone up. Cytodyne went up 20.
The tie index.
The tie indicator. So Cytodyne went up 20x. ESE is up almost 8x. I mean, but so it's
I didn't do that for that reason, but great. Yeah.
Okay, so let's wrap up. So I think we're going to probably be seeing more of you in the coming weeks. It looks like the cadence, the pace, things are picking up for more deals. What else can we be looking at in terms of milestones coming up next month or so? What's on the?
We think we've got a couple of bricks in the wall on the retail side that we're going to start talking about. Hopefully by the name of brand and maybe some new partnerships that might enhance our momentum in that category. Of course, the marketplace is waiting for me to get a definitive on the ground with ABI. I perceive there to be zero risk in that deal. It's just doing the necessary blocking and tackling to make sure you've got a contract you can live with for 7 years. So that's underway now. And I think if you look at the sort of the next 3 or 4 weeks, that's probably the two highlights that we'll be talking to the marketplace about.
Okay, let's see here. Last question, favorite, which we always ask you, but based on the new developments, based on all the new developments, what would you say is the top 3 reasons, in your opinion, for investors to consider VSBY right now?
I think our market cap right now doesn't fully factor in the ABI deal because we haven't disclosed enough about it for the market to factor it in. But once we do, we think we're going to go for a bit of a refactor. It's an enormous deal, and that'll be clear as the dust settles. That's number one. Number two, we're broadening our market reach to include a distribution into things like critical infrastructure, which is the solar field opportunity, and look for us to do more in that category. And just a quick reminder that we have this force multiplier effect with respect to our go-to-market. Major partners that are mammoth or disruptive, sometimes both. And we think that those are the 3 things that make us different and very investable at the moment.
Jay, on that note, I want to thank you. Thank you everybody for joining our live stream today. We'll hope to see you again soon, very soon, with some more good news, big news.
Thank you, Jack.
Thank you, and thank you everybody.